Welcome back again for another episode of a Candid Interview with Rob Mitchell, my personal mentor of almost 10 years now, and one of the best traders I've ever known. And today we're going to continue talking about the markets, the mindset, some technical aspects, and taking your questions. So, welcome, Rob. And one of the first questions we got today is in regards to what we showed last week about the trade that you had on in bonds and how the trade was in your favor for over $1,000, and then it went back down through your entry and stayed in the negative territory for a while before turning around again. So let's address that first.
Um, yeah, that's a really great question for anybody to ask. Um, now, I'll start the answer to that question by, again, covering how the bond model works, because your money management decisions are always a function of how your system works. And so, or they should be. But the bond model is designed to discern whether or not money is going to flow into bonds or not.
Mhm.
That's the basis. In fact, a fascinating fact about the bond model is that the system itself actually has no inputs for bonds. It's looking at other instruments that indicate to us whether or not money should flow into or out of that
I see.
instrument. And so you're looking really at the larger context. And so when I put on a trade in the bonds, what I want that entry to have going in its favor is to have that area that I'm buying or selling in be what I might refer to as a protected area. So, what do I mean by protected area? Well, I mean an area on the chart which, when it departs from there, I know that my I know that my position is relatively safe in terms of getting hit. So it's kind of like having a stop, but not, because you never want your stop to get hit, of course. But so I have a position on a place on the chart where I know that price is likely to move away from it, but also that it's protected. Now, I think also part of that question was asking something along the line of, well, why wouldn't you have just taken profit and then re-entered? And the answer is because, from the model's viewpoint, the money is flowing into bonds. So when money is flowing out of bonds within that planned intent, I don't really concern myself with that. So it might flop around a little bit. And this is a really important point for traders to understand and that we've covered in some of the prior interviews. And so let me kind of put that into a framework for you. 90% of what makes you a great trader is not the present trade that you're in. It's the larger context of what's happening within the framework of trading. It's not one trade. One trade is a relatively meaningless event in the grand scheme of things, but trades themselves contribute to the grand scheme of things. So that's a little bit difficult. It's a difficult concept for some traders to really get their handle on. If you're thinking that each trade has to win, then you can really get into a trap as a trader. So I'm not sure if I'd mentioned it in the interview series here, but there's on my old blog, markettradersjournal.com, there's a post there that if you search that website on the term footprint, there's a lot of things you can do with a footprint, but if you search on that term, you're going to come up with a couple of articles, and one of them's got a video in it. And it talks about the trade distribution. Now, I think earlier I had drawn a trade distribution for our viewers, and how you really want to get caught in the tails of the distribution. In other words, put it another way, you want to get caught in big trades. Okay, so most of the time, financial data is usually has a really peaky. Let me just draw this again. If this is your trade curve, let's say that's a stop right there, and just nothing goes past there. So all that's invalid. Okay, just stop is right there. This is a $0 right there. This is really peaky. Now a bell curve would look more like this. Be a nice smooth bell-shaped curve. Financial instruments and trading tends to have a really peaky distribution. And so what that means is that most of your trading is small wins and small losses. These are wins over here, and these are losses over here. See, so you get a lot of small losses, right? You want to have a lot of small losses. Or, I mean, you don't want to have a lot of small losses, but you know what I'm saying. You want your losses to be small. And then a lot of trades you're going to get caught in just going to be small, smaller winning trades. And then you're going to get over in this tail of the distribution. These are like $3,000 and $4,000, $5,000 winners over here. Now what's going to happen is, if you draw this to right here, this is a little skewed over to this side, so this system's pretty good. I call it a footprint. Now if you've got a trading system and this shape starts changing, it can often alert you to the fact that your trading system has a problem well before it fully manifests. Just an interesting side note. But this distance here, if I draw another line right there, because of these losses over here, this whole region of the distribution is break even. Okay, all that area in between those is just break even. You haven't achieved anything except for making your broker wealthy. Okay, nothing against the brokers, we need them. We love you guys, but so everything that you're trading for then is on this side of the curve. This. So if you cut your if you cut your runners off, which most traders do, you know, we've already talked about that. I'm gonna redescribe that in just a second. If you cut your runners off, which most traders do, you're a net zero trader at best. Zero. You have a lot, you know, you have some winners and you have some losers, and you don't get these. Now, when you add up all this area under this curve right here, you know, this has got, $700 winner, $500 winners, and all the way out to, $4,000 or $5,000 winners, stuff like this. Okay. Why? Because you let it run. Now, how were you able to do that? Well, number one, you had a method for understanding what was happening with the ranges, probably, and you, and because of that, you had the foresight to let it run. So, in answer to the question, when I get into a position in the bonds, I'm looking for that. And if I get out and I get back in again, and if I get back in higher, then my stop's probably not in that protected region on the chart, and my risk goes way up. And that'll change the distribution of this curve. So I know I don't want to change my footprint or my distribution. And so I'm rock solid, baby. Once I place that trade, I'm not touching it. I know statistically what I need to do in order to make the right decision, so I don't get caught in a mental trap. And so now there's one other point that I'm going to cover on this. What do we talk about? We've talked about it in some of the prior ones, but I'm going to cover it again. When a market starts rallying or trending, what did we say? Markets trend on blank volume.
On low volume.
Yeah, right. So what does that mean? It means that when you get to here, everybody bails. And then when you get in these, there's nobody left, except for hopefully you, right? So as a market trends, the participants in the action decline to the point that it becomes a runaway. And then what happens is if it's rallying, sellers become afraid to sell. Sellers become afraid to sell, and then everybody jumps on pushing, pushing. And you entered way down there in a protected position. Actually, you did that today, I know for a fact. I watched you do it. You entered a trade in crude oil, probably less than 15 ticks off of the low after we hit a major target. And you rode that thing up for about 70 ticks or so. And why did you know to do that? Ultimately, because we knew that we were going to go 85 plus ticks off of that low. Yeah, and we also knew there was a virgin point of control up there, and that gave you the staying power to get caught in a 70 tick
Yeah, I set
trade.
a limit there at 61, and I just waited.
Yeah, I'll show you guys where we're talking about. I
From
believe
from 90 to 61.
right here. Okay, so Vadim buys right here. Okay, because we had come down a given amount, and we were getting what we call a type 2 pattern. This is actually a type 2, we call a non-cycling type 2 pattern right here. And he got in about 12 ticks off of the low right here. And where most traders wouldn't have the staying power to stay through this, he stayed it all the way to 61. All the way to right there. What a trade, right?
Yeah, that was fun. And then I shorted it for another 15 ticks.
Ah, you chickened out.
Yeah.
We had another guy in the room that sold this at 63 because this was I don't have that chart here, but this is a virgin point of control from a few days ago, and he wrote it at least down into here. I don't know if he bailed right there, but anyways, this is the kind of stuff that gets you in that. This kind of behavior is what gets you into this area of the distribution. So you're trading for this, but in the moment it doesn't feel like it. In the moment it feels like this.
Unless you let it run.
So you can't. Yeah, so you can't trade for what your raw gut thing is telling you. You got to trade for what is over here. Albert Einstein said you can't solve a problem on the level of a problem. Now there's an interesting thing about this too. Let me see how I articulate that. You're actually stepping, instead of like Albert Einstein when he does a thought experiment, he's actually stepping to a higher level of abstraction. But for a trader, this is so counterintuitive. This is a wonderful topic. For a trader, you're not stepping to a higher level of abstraction, really. You're stepping to a lower one. You're solving the problem. You're solving the problem on a level other than the problem, but it's not a more abstract one. It's a simpler. And that's a simple idea is just understanding. I mean, you could call this higher level if you wanted to, but it's a little different because it requires you to be basic, really basic, but you do have to see outside of this box right here. Because if you trade in this thing, you're not going to make any money. And that's what people miss out on. They're like thinking, I got to win. I got to win. No, you don't got to win. You just got to be in the right place at the right time. It's got nothing to do with you. It's nothing personal. You're getting caught in something that has nothing to do with your skill because you're not pushing the market higher or lower. You didn't do this. You were already in. You had nothing to do with that. You know, you're not great. You know, nobody's great. You just, you knew what was likely at play, and you positioned yourself for it. And on this particular one, you hit pretty well. That's trading. That's trading.
Yeah, you get a couple of those a day, and that's good.
Yeah,
Yeah.
or one. Yeah, one. Only need one.
Let's talk about what we promised our guys in the last video, and let's show them the probability inversion table.
Oh, cool. Let me find that.
And
I have a file here that I just keep all this stuff in. Every time I do a little study. Oh, we wanted to do that for the EES.
Yes.
Oh, this is the EES. Okay. This is the EES. I did that for you. Okay. Let's pull this one over.
Yeah.
Let's pull this one over. And take a look at this. Okay. Now, it's very important when doing studies like this that you understand the study from the exact way the study was conducted. It's a big pitfall for doing something like this to have something in your logic that isn't exactly right. So first I'm going to tell you the way the test is constructed so that we can understand how best to use the data. So to do that, let's look at this ES chart for a second. So this is a Smart Renko chart, 5 ticks. Okay. The construction of this is that these reversal bars are 10 ticks tall. And then you can see these other bars are half the size of that. 5 ticks. So that bar right there is 5 ticks tall in the brick.
Body, huh?
We'll say 5 ticks, in the body or the brick. And that is $62.50. And then this reversal bar is 10 ticks or $125. Okay. What I'm doing is I'm conducting a study and I'm asking the following question. When I get a reversal bar, how far do I go before I get another one going the other way? So in this case, I go 1, 2, 3, 4, 5, and then I get a reversal. Simple test. So then what I'm doing is I'm making a distribution of it. So how often do I go 1, 2, 3, 4, 5? Well,
which is 25 ticks.
It's 25 ticks. So I went 25
so that
ticks.
40% or 68%.
Yeah. Hold on a minute. Yeah, so it's the reversal bar, and then 1, 2, 3, 4, 5, 6. That's right there. Okay, and it was going up. Notice these are pretty close. Markets are extremely symmetrical with this stuff. And you know that too back when we did all those zigzag studies. This stuff's rock solid statistically. Tests like this, tests of this nature, okay, will distribute themselves absolutely perfectly.
Well, at least in futures.
Now look, yeah, no, pretty much. Well, yeah, you could have instruments that might have skewed distributions, and if they were, you might be able to exploit that. But on this, look, if we take this up and down at the top at that 68% level, and we just turned them side on their side
Mm-hmm.
like that, then what would we have? We'd have something like a bell-shaped
Mm-hmm.
curve, right? You'd have 66 and 68, and then you'd have 68 and 65, and then you'd have 40, and then you'd have
Mm-hmm.
25,
Mm-hmm.
28, like this
Right.
going out, right? So it would peak up here, and then it would
Mm-hmm.
come down, right? So pretty cool. So this is just like, basic, simple statistics. So the question is, how, if you go 5 bars, what's the probability it's going to turn around? What's the probability it's going to turn
It's
around?
going to be 10%.
No, it's
No.
this one. Yeah, yeah, yeah. Because you're always going to the
Mm-hmm.
next one. Actually, it's
Okay.
7%. So, it's about 93% against.
So don't buy after you get a reversal bar and then 6 ticks or 6 bars.
Well, what do you mean? It's going to the moon,
Right.
man. You're gonna get a 10 tick reversal bar. It's $125. Why would you risk 125 if
But it
you don't
also
need to?
doesn't mean that you should short it.
Well, okay, let's go there. Let's go there.
You would have to look at
Let's
the
go there.
range of that time period, right?
You could look at other factors too. So let's cover a
Mm-hmm.
couple of these things. Number one, I want to draw your attention to another aspect of this table, and that is 50% is
Mm-hmm.
random. 50% is random, right? 50-50 is even
Mm-hmm.
chance, right? You flip a coin 50-50, right? But what you want is that you want better than 50-50. Now, here's the interesting thing. If I fire into a trade on this chart at that reversal bar right
Mm-hmm.
there, what's the chance I'm going to go one more bar?
68%.
So, it's up, so
Okay,
it's
66.
66. Plus or minus,
Mm-hmm.
you don't, this isn't rocket science, But, but wow, wait a minute. It's 66% in my favor if I fire that? Yeah. Okay. Well, if it goes one more, what's my chances of it going one more?
68.
Well, 68. Hey, that's that's an edge.
Mm-hmm.
That's a substantive
I like
edge,
how it
right?
doesn't start at the highest percent. You know what I'm saying? It doesn't start at 68. It goes.
Yeah, this is a you um yeah, actually on crude oil.
Well, I mean, ES starts at 68 on the down bars, but on the up bars, it starts at slightly. It's
Yeah,
interesting.
and this may vary over
Mm.
time. You just update this
How many
table,
days is
you
this
know,
study?
50. I usually do it with that's a ton of
Yeah,
data. That's a ton of data.
3 months.
So, but what I'm drawing your attention to right here is the fact that when you go 20 to 25,
Mm-hmm.
you go 20 to 25, what happens to the probability?
It gets worse than random.
Worse than random. Do you ever want to trade in a situation that's uh, that's less than random?
No. So basically, if it's
Is
gone
there?
25 ticks from the pivot, you're in a less than random situation.
Yeah. So, if you want to subject yourself to less than random situations, for in this particular case, we're talking about a reversal bar. You could do this study in all different kinds of
Mm-hmm.
ways. Um, but I can tell you in the ES, pretty darn good chance you're going to catch a reversal bar there about
Mm-hmm.
60%. It's 100 minus
Mm-hmm.
40.
So you're saying
So
if you're buying ES and it's all your entry is already 25 ticks off of the low pivot, you're playing with fire, you got only about 60% that it's even gonna go, or 40% that it's even
Yeah.
gonna go another 5 ticks.
Yeah. So, I mean, there may be some cases where you would do that,
Mhm.
you know. Um, there are different things that might tell you that it's going higher or
Right, we're
lower
talking
there.
averages, right?
Uh, but but you should already be
Mm-hmm.
in, um, if you're being smart.
Mm-hmm.
And so, this is a wonderful piece of information that's an edge, and it's quite comforting when you enter a trade that you know that it's in your favor for 1 to 2 bars, pretty high probability.
Mm-hmm.
Now this is just stands on its own. This study has nothing to do with other factors.
Mm-hmm.
So when you start, we talked before about what kinds of components make up a world-class trading system,
Mm-hmm.
and and the kinds of components that make up a world-class trading system, I will repeat, are simple, always simple, uncorrelated components that lead to that are making a prediction for the same conclusion.
Mm-hmm.
So these kinds of patterns that we use for trading and entering a trade take these probabilities and they put them up into the
Mm-hmm.
80s.
Stacking probabilities.
You're stacking
Mm-hmm.
probabilities. You're stacking probabilities in different contexts. This is a bar level
Mm-hmm.
context. You're going to stack probabilities at a pattern context. This is over say 3 to 5 bars. Okay, you've got a pattern that works over 3 to 5 bars. It's 80%. You know that trends manifest in a certain way, probably at about 80% probability. You know that the range expansion is aligned to the upside, with a 80 some odd percent probability, and you just start stacking all those things in your favor. Might get 5, 6, sometimes 5 or 6 of them all lined up at the same time. Now, what does that feel like? Aside from you know
Mm-hmm.
being in this box,
Mm-hmm.
what does it feel like? Well, it feels like you're a kid solving a
Mm-hmm.
puzzle, so it's
Mm-hmm.
fun, and it's mentally engaging and it's fun, and if you have some other traders you're doing it with, and you got a chat thing going on, it can be an absolute
Mm-hmm.
blast. You can even enjoy. You didn't catch one, and somebody else. When Steve caught that short
Mm-hmm.
today. Um, I actually found well, I wasn't in it. I was just really enjoying Steve's trade. I mean, I was like better than going
Yeah,
to a
from
movie
far
or
away.
something. Steve's trade, man, he's up like 60 ticks or something. You know. So anyways, those components, and this I call probability inversion because the point where it inverts on you.
Right. At how many
That's
ticks?
that's why I call it
Mm-hmm.
probability inversion. It's a little reminder. Hey, wait a minute. No, don't fire here.
Mm-hmm.
You missed
Mm-hmm.
it. Don't fire here. Wait for it to
So
reset.
some kind of pullback, right?
Yeah, yeah. You're looking for
And
a reset because the market's trapping all
pullbacks
day.
always look
So
like reversals, don't
yeah, they're
they?
sucker
Mm-hmm.
plays, man. I think it's just a little sucker play.
Mm-hmm.
I don't really. This is a beautiful one right here. I call this the 5 tick rule. It's 1 bar. So you got this structure right here. It comes down here. These guys think the market's going down, and they're all trapped
Mm-hmm.
in here. See, they're all trapped in here because it took out that
Mm-hmm.
low. See, it takes out that low, and they get on the wrong side of the market, and then when it starts coming back up, their stops fuel it.
Mm-hmm.
And we call that the 5 tick rule, or we also humorously call it 1 foot in the
Mm-hmm.
grave. 1 foot in the grave. Um, Here's another example of that on the counter trend. We call this a peekaboo. You take out the low by 1 bar, and then you get this reversal pattern in
Mm-hmm.
here. But there are other things telling you to buy in here. But this is the first thing that tells you that that first fake out and trap, because it traps a bunch of dumb money shorts down in here. See what this high was up at 29.41, and these guys are 61 ticks off the high. This guy decided, yeah, I'm 61 ticks off the high. Let's sell it.
It's going down to zero.
Yeah, yeah, yeah. Forget this table. I mean, just think of the way this
Because
works.
he's where,
But
what do we say, 60? So he's at
well, if
1% there.
yeah, if we take this out of this context and just look, how many ticks are you off the high? It's 99%. It's going the
Can you
other
pull
way.
up oil inversion? Yeah,
The
just
oil
kind
one.
of put them
Yeah.
side by side.
I think this one's current. Let me. Yeah, here's oil, but they're remarkably similar, as you
Yeah,
will see.
same 1% at 60 ticks.
Yeah, no, they're remarkably similar. Oil gives you a little bit more before it. Oh well, no, wait a minute, because I had this one go. I had this one
Time, all
include
right.
that.
Okay.
This table might have been. This was an earlier table, and it was constructed a little differently.
So this is how
Um,
kind of like where you figure that the 20 tick range is kind of a noise, where you get the same distribution at 20 ticks. The first.
yeah, yeah. Actually, the noise is
Okay.
15,
On both
and so
markets.
somewhere.
Uh-huh.
Yeah, pretty much. And so somewhere between this is the funny thing, because if you just do studies on distributions, 10 to 15 ticks is just like noise. If you were an electrical engineer, you'd say that's noise in the
Mm-hmm.
circuitry. And so somewhere between 15 and 20, um, or somewhere between 10 and 20, you got to make your thing.
Mm-hmm.
You got to find your
Mm-hmm.
place, and then things are stacked in your favor for at least 5, and often you'll get what I call a runaway from those
Mm-hmm.
areas. It just won't come back. It'd just be no looking back. Just like this trade right here. You enter here, you got a grand whopping like 2 ticks against you, and that's
Mm-hmm.
it. So call it zero
Mm-hmm.
T. You enter in a place where the market just runs away from your entry. That's a protected entry when you do that. That's what we were talking about earlier with the bonds, right? It's protected
Mm-hmm.
entry. And so you can actually, a couple bars later, move to a break even and just go, I'm sitting on my
Mm-hmm.
hands. I'm taking the batteries out of my mouse.
Mm-hmm.
BOM. Taking the batteries out of my mouse. I'm not taking this trade off. And because I know it's probably going up to
How
such
far
and
away do you
such.
put the batteries?
Uh, well,
How
how
fast
fast
are
are
you?
you doing? Yeah, but we have funny things. Also, if you have a standing desk, it's still SOH. It's
All
standing on
right.
hands. So if you
Okay, it
want to
is.
stand on your hands,
Time behind
you
your back.
yeah, yeah. And so because that what that distribution looks like, you know what
Mm-hmm.
you got to do.
What about,
And
sorry to interrupt, but kind of on the same topic, sitting on your hands. If you had, Ninja Trade or whatever trade station, whatever program you're using, if you had a built-in type of limits that you can impose on yourself that were, say, password protected, what kind of things would you put in there personally
oh,
or recommend to other
uh,
traders?
no, that stuff isn't going to
I
work.
mean,
Look,
like
here's
let's say if a trader is over trading, he's taking 20 trades a day and he's nowhere, would taking less trades maybe help?
well, you should take fewer
Mm-hmm.
trades, but the nature of trading is to draw you into that minutia.
Mm-hmm.
And the brokers know this. If you look at the way the brokers construct their dome, for
Mm-hmm.
example, look
It's
at the
designed to get you clicking buttons.
oh, you bet it is, man. They probably got they pull in a team of MIT, Stanford scientists hooking up electrodes to people's brains and stuff, set them in a room because it's like trading can be like a
Right.
video game. Click, 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 click,
Yeah.
click, click, and it's $4
Mm-hmm.
every time
Mm-hmm.
you click or whatever. So, um, so they may even bring in. I suspect they may bring in um, research psychologists and figure out what's
Mm-hmm. Oh,
gonna
down to colors of buttons and
oh
everything.
colors and colors and everything. Um, when I look at the trade station dome, for
Mm-hmm.
example,
It's
it's
beautiful,
brilliant,
yeah.
dude. It's
Well,
brilliant. And I guarantee you're going to
yeah.
click like crazy. It's got the dollars over in the
Right.
margin, and the thing is, you can do anything on it.
Mm-hmm.
You can drag stuff
Mm-hmm.
through it, and the thing is
Well, Ninja
brilliant.
Trader has invested a lot into improving in the NT8. I've looked at
Oh, have they?
their
I
dome is
haven't.
great. I
Got it.
mean, it looks great. I haven't played
Oh,
with
is
it
it?
yet, but it looks a lot better. Mm-hmm.
Oh, okay. Um, yeah, I haven't looked at the one in Ninja 8 yet, but I I had at one time or another sent over some things for them. I use the chart trader. I just love the
Yeah,
chart
it's
trader.
great.
You can just pull up whatever you wanted right on the
Mm-hmm.
chart, and that works really well because it's very intuitive and visual. And then I look at the order book through um, other
Let's talk
instruments.
about trading as far as using trading to make money versus doing it because you love it.
Um, okay, that topic could go pretty deep. Um, here's the thing. Um, like I'll speak for myself. Um, I am just absolutely unquenchably fascinated with financial markets. Um, I've spent tens of thousands of hours studying charts and just you know I can't get
Mm-hmm.
enough of it. There's just pattern after pattern after pattern, and it's always presenting itself to you in a little different way. And so you have to be adapting to it, and because markets by their nature will not let you get away with the same thing over and over again. By their nature, it'll fill in the holes.
Mm-hmm.
I think we might have talked about this. If you run an optimization on a financial data with any kind of just simple trading system, you're going to find parameter sets. Almost impossible that you wouldn't find really good parameter
Mm-hmm.
sets. The immediate adjacent one might be absolutely horrible, but and so you can always find something in there that's working now.
Mm-hmm.
You know, um, the question is going to be whether or not it's based on something that there's a reason why it should work.
Mm-hmm.
Like this concept of trap traders or something
Mm-hmm.
like that. But so your question has to do with
Mm-hmm.
passion. Um,
And also, if it really, if it makes a difference too.
well, could you rephrase the question just so I'm absolutely sure that I'm on top
Like,
of it?
if how successful are you going to be as a trader if you're not really into it, but you can kind of make, good money, say, from it, but you don't really love it or have passion for it?
Okay, let's call this passion versus
Okay.
dollars. Okay, let's call it that. Here's the thing. In any endeavor in your lifetime, if you don't have passion, and we've all started things that, somebody talked us into or whatever, that we ultimately don't really have passion for. And then what ultimately happens is we let it go by the wayside. And because, it's not our passion. Now, from a psychological standpoint, or speaking as a coach or NLP practitioner or whatever, life is designed to
Mhm.
work. But the way that life works best is when what you're doing in your life is driven by what you truly love.
Mhm.
Now, I think this came up in something we were talking about the other day. I said to you, because I'm presented with opportunity every single day.
Mhm.
A day doesn't go by that I'm not presented somebody reaching out to me with something new that could take a significant amount of my
Mhm.
attention. Um, but I have to, and as I've gotten older, I'm much quicker at getting to that question. Is this, Rob? Is this where your passion
Mhm.
is? Is this where your passion is? And if I'm even
Mhm.
hesitating on
Mhm.
that, if I'm not inspired,
Mhm.
uplifted, and inspired, the inward breath, the lifting and goosebumps kind of a thing from it, then I know that that's not what I'm doing in my life, and so, um, but look at a guy like Richard Branson, for
Mhm.
example. Here's a guy, whether you agree with Richard Branson or not. Here's a
Mhm.
billionaire who, by any measure of the imagination, is just playing.
Mhm.
He's just
Mhm.
playing. Oh yeah, start an airline, but he's got a whole staff of people that he can hand his ideas off to
Mhm.
because he could throw, you got a few thousand million laying around. You can throw $1 million at a project
Mhm.
and with basically no real risk
Mhm.
to you. Doesn't matter. Okay, throw $1 million
Mhm.
at it, see what happens. You got competent people to help you to realize that dream. People who make what your passion is their passion, and your connections and whatever else, you're able to put things together that are pretty big scale, $1 billion thinking kind of things. But there's a passion there, and the resources are there for accomplishing that. So if you are just doing something for money, if you come into trading and you think you're really thinking, I'm going to trade for the purpose of making money, and but my real life um, is doing something else.
Mhm.
My real life is, a lot of guys come into this, and what they really want is some kind of
Mhm.
freedom. I'll hear, well, I work in this job and I'm not really fulfilled or satisfied in what it is that I do there, and uh, I see trading as a potential um, means for me to seek my
Mhm.
passion. Now, we have, uh, or I had a fellow, and I probably mentioned him before. He came in and he got the smart pattern system, which is one of the charts for it you're looking at on your screen. And um, he had lost quite a bit of money before he got to
Mhm.
me. And he got the system, and he was extremely
Mhm.
passionate. I mean, just massive
Mhm.
energy towards this goal. And within 6 months, he had made over $1 million trading in crude. Started with 2 lots, I think, and worked his way up to about 15, making 35, 40 grand a day,
Very
kind of
nice.
thing. But here's the interesting thing: this particular person's interest in trading, though he has passion for trading, the what he does with the money is he donates it to feed homeless children.
Mm.
So, look, this is kind of interesting because either you're working with something from a physical basis, just physical force making something happen, or you're working there on a mental basis. Everything that you ever achieve in life is started with an idea, right? But then this starts taking on the flavor of almost like a spiritual or divinely driven activity. So over the holidays, he gave $1 million to feed homeless children that he had made trading, and that's his purpose for trading. He's still passionate about trading, but he's got an ulterior, higher thing that he's doing with it. Yeah, and so,
He's in
but if
alignment
you,
then. I mean,
he's in
and
alignment.
he's
Yeah,
got
I call.
passion for both
Mm-hmm.
of those things.
Now, if you just come in and you think you're going to make some money, and a lot of guys do this, and you're not addicted to studying charts and just really got the bug, you're going to fail. It's too hard. Trading is really, really hard work. To get good at trading is really hard work. In fact, I had a client tell me a couple of weeks ago. He reached out and he enumerated all these things. Oh, I've been successful in this in my life. This guy's a medical doctor. Okay, he's a medical doctor, really smart guy. I've been successful with this, and I'm successful with this, and I'm successful with this, and I'm successful with this, but nothing. Now, medical doctor, man, just getting through school is a big deal, right? Internship and all that stuff. It's a big deal. You got to respect these guys, man. It's amazing. Um, and he said, but nothing has humbled me more than learning to trade. Nothing has humbled me more than learning to trade. So, trading's like medicine or any profession. You get some basic skills under your belt, and you practice. But that practice requires work and perseverance because you're going to get knocked up. You got to learn to lose before you can learn to win. And I use the example of the Korean archers. Okay, the Koreans produce some of the greatest archers in the world, Olympic archers. And the way they do this is they start them at a very young age, and the first thing they do is they teach them reverence. Okay, what is reverence? Is when you have absolute respect for the craft. Okay, so what's the first thing? Oh, you're going to become an archer. Okay, for the first month, you can polish the quills, and then for the second month, we're going to actually allow you to touch a bow. And for the third month, we're going to allow you to hold it, but you can't bring your right hand over to it. And in the fourth month, we're going to actually let you bring your hand over, and then etc. Right? And then finally, after like a year, maybe they're allowed to actually put an arrow on there. And then what do? They put the target like 2 meters away. At which point, this person has just absolute supreme reverence for the craft of archery. And what do? They get a bullseye. Okay. Then what do? They move it another 6 inches away, and then another, and then another, and another, and another. And this guy's shooting bullseyes at 100 meters. He's never made a bad shot. Some of the best archers in the world, right? Now, my wife is a violinist. She was trained the same way. first month, you're just holding the violin, not allowed to touch it. There's a 1 hour a day violin, hour a day, right? Then after a month, maybe you're allowed to bring your hand up, right? Same thing. Absolutely astonishing. Absolutely astonishing at the craft or art of violin. And so reverence.
So if you were to bring in a totally brand new person who was very interested in training and never done it but been successful elsewhere, how would you, teach them this?
Well, I would actually be overjoyed, because most guys, by the time they get to me, this is there are so many like limiting decisions that people, trader wannabes, carry with them. One of the big ones is it manifests in a funny way. They've gone through so many things that were that just garbage. Anything they ever read in a trading book is garbage. And I think we talked about this. It's not that it was garbage necessarily when it was published, but as soon as it's published, it becomes garbage. But so this individual has gone through so many things that just don't work, that they actually have made a limiting decision that nothing will work. But their conscious mind wants to keep trying because the payoff can be so huge, like $1 million in 6 months to feed homeless kids, right? So the payoff can be huge. I mean, you could lose for years and then have $1 million year and recoup it all. So it keeps you at it. It can keep you at it if money is the main thing. But what happened is they've made a limiting decision that they actually don't believe that anything could work, but yet they keep going from thing to thing. And so what will happen is, by the time they get to me, they're tainted at that level, and they actually won't be able to see when you put something that works right in front of their face. They literally won't be able to see it. Yeah, it's called a negative hallucination. It's like your keys are on the desk in front of you, but you've walked past them 14 times. Where are my keys? I can't find them. Or your glasses. Yeah, your glasses. You're walking around the house looking for your glasses, and then you realize after like 20 minutes they're on your nose. No, I've had that happen. But keys are the classic one that we all know that one. And you're almost like sure somebody somebody is playing a trick.
I think one time I was looking for my phone while it was in my hands. I remember that a few months ago.
Well, we live in such a multitasking world these days. And you want to talk about reverence. You cannot have reverence if you're multitasking. There's only that moment. Only that moment. Only that moment. So that's how you put on a good trade. You're there fully. You're not playing with your email. You're not texting. You're not thinking about what you're going to do later with your girl. You're there. You're just totally in tune with it, and you're in the zone, and you're so. Anyways, to kind of sum that up, if you're just trading for money, it's possible that you could be successful with it, but probably not. The work is too all encompassing, and that's without regard to the way you're approaching it. If you're approaching it, as like a screen trader, with the kinds of ideas that I'm presenting to you, or if you're approaching it mathematically, systematically, statistically, no matter what, even to learn to do a kind of, I just showed you the simple statistical test of the probability inversion, but you have to have a lot of hours of expertise. I call it domain expertise. It's like, okay, I've been looking at charts for tens of thousands of hours. I could tell you, I could just start like rattling off statistical tests that you could that you could make,
Mm-hmm.
you know, to no
Mm-hmm.
end. I wish I'd, if I was Richard Branson, I'd put some guys
Mm-hmm.
on it. But I mean, I literally have like 30 pages of stuff that could be
Mm-hmm.
tested that I just, but
So, but back to the new person who wants to trade.
if he's completely untainted, I start him out just with the absolute
Mm-hmm.
basics.
And
Yeah.
just adding things one by one.
Yeah, start out with the absolute
How much
basics.
would you spend working with, like, on technical stuff versus psychology? Would it depend on the person?
I would, if he's
Mm-hmm.
untainted, um, uh, I've had guys that I could just show the system and they just take off with it.
Mm-hmm.
Yeah. If they have that disbelief, they're probably going to go on to greener pastures within some period of time.
Mm-hmm. Mm-hmm.
You know, you'll get an email from them 3 months later, and they'll, get a nice mail to say, hey, when I was in the room, I really learned a lot. I did this, thus, and so. And but even though it was right in their face, um, they just couldn't manage to make
Mm-hmm.
it work. Yeah, this happens all
Mm-hmm.
the time. I, in fact, in fact, um, I I've put a tremendous amount of my resources towards the discovery of what drives
Mm-hmm.
this. Yeah, and so, but invariably there's some kind of limiting decision that is preventing uh, that trader from being able to achieve what he wants to achieve. And the way that works is there's something. A limiting decision is something that occurs at the unconscious level.
Mm-hmm.
And so what what a lot of people don't really realize is that all of your memory is unconscious. All of your learning is unconscious. I mean, it may be there may be conscious awareness of it initially, but then it becomes automatic. It's like, okay, you can go out and hop on your bike and ride down the street on a bike. You haven't been on it for 30 years.
Mm-hmm.
Well, you couldn't consciously remember all of the things that you need to do in your musculature. I mean, I think from your shoulder down to the tip of your finger, there's 152 muscles.
Mm-hmm.
You know, your conscious mind's only capable of paying attention to about 7 bits of information at a time. It's it's virtually impossible for your conscious mind to do that. Your conscious mind can send a signal and request the
Mm-hmm.
action, but it can't do it. That's your unconscious mind. Your unconscious mind's beating your heart.
Mm-hmm.
It's managing your whole
Mm-hmm.
body. And so the unconscious mind is just
Mm-hmm.
vast. It remembers everything you've ever done in great detail. And if you don't believe it, go into a little hypnosis, and I'll say to the person, okay, Jim. When you're in trance, you become like a little
Mm-hmm.
kid, because the unconscious mind's like a
Mm-hmm.
5-year-old. Okay, so you could say, okay, in a second, Jim, whatever. I'm going to snap my fingers, and you're going to be in your first grade classroom. Okay, are you ready? Snap. Well, where are you? I'm in my classroom. Well, what do you do? I'm sitting in my desk. Can you see the other kids around you? Uh-huh.
Mm-hmm.
It's fun. And then you say, well, look up to the front left of the class. Who's sitting up there? That's Todd. Do you like Todd? Yeah. Is he nice to you? Mm-hmm. You know, what's he wearing? Oh, he's got a plaid shirt on today. And it goes on like this. It's all
Mm-hmm.
there.
Wow.
But I mean, you couldn't pull that out if you even tried. And so, but it's just like that far away. And so if you learn something at that young age that you had since forgotten, because we learn things, and then that's a beautiful thing about the way the mind works. You learn something, and then you can forget about it, and you can drive the car halfway across town and have no
Mm-hmm.
recollection. and you do it perfectly every time. And so it goes on automatic. That's a wonderful thing. But then what happens in the trading is that there is actually an unconscious program that is working, and um, and it will prove itself right.
Mm.
The unconscious mind will always prove itself right, and so what will happen is, if this person had learned at a young age that they're not smart, or they don't deserve to win, or they don't, these kinds of little thoughts or
Mm-hmm.
subprograms, in the trading environment, that unconscious belief will keep sabotaging the
Mm-hmm.
individual. Now, the funny thing is, you go into a trance state, and you go back to that time where the individual learned this thing, and you can just simply ask them while they're in there, because they'll be aware of both the limiting decision, the negative emotions associated with it, but they'll also be aware of it conscious in the present moment, because you're entirely conscious when
Mm-hmm.
you do this. And you just ask them, well, does that behavior help you
Mm-hmm.
now? No, no. But it helped you back then, didn't it? It was useful for you back then. It protected you, didn't it? Does it still protect you today? No. Do you really understand that right now? Yeah, I do. I do. And so you just discuss the learnings associated with that activity, and it brings it into consciousness,
Mm-hmm.
and the problem dissolves,
Mm-hmm.
because they're now aware that they're been sabotaging themselves for 40 years over some dumb little thing that happened to them in a classroom in first grade.
Mm-hmm.
You know, it's crazy, but it's
Breakthrough.
true. Yeah, truth is stranger than fiction, and the thing is, something like this can take an
Mm-hmm.
hour to
Mm-hmm.
fix. Take an hour or two to fix, and and I mean, sometimes I've cleared stuff like this, and I just walk out of there going, "Oh my goodness, I've spent my whole life with this little
Mm-hmm.
box that is I've sabotaged myself over and over, whether it be in trading or in life in general." And it's tragic, because it's so the technology in making personal changes advanced just like cell phones. It's just astonishing how effectively these kinds of things can be
How
addressed.
does one
and
discover
and
if
so,
they have a limiting belief or decision?
well, first of all, when you have a limiting decision, you'll be triggered.
Mm-hmm.
Now, let's I don't want to go too deep, but basically, there's a concept in psychology called fight or
Mm-hmm.
flight. Okay, the the primary function of the unconscious mind is to protect the body. Like I said, it beats your heart, it breathes you, it respires you, it takes care of
Mm-hmm.
you. It heals your wound, it grows your hair,
Oh, yeah.
it it drives you across town without
Mm-hmm.
driving ineffectively. It's an astounding piece of technology. Um, and so, but it wants to protect you, and that's why even if you are consciously aware, I could have somebody come to me and say, I'm consciously aware I keep sabotaging myself, but I can't stop. And people tell
Mm-hmm.
you this all the time. You
Mm-hmm.
know, I I know smoking is really bad for me. I mean, I'm waking up with
Mm-hmm.
blood in my throat, but I can't
Mm-hmm.
stop. Well, what's up with that? I'm entirely aware of the
Mm-hmm.
problem that I have. I can't stop. No, I can't stop. You know. Okay, well, somewhere back there a decision was made, and that behavior is protecting you. And so you end up with what's called what we call a defended limiting decision, which can be a really block to get to. Can be a block to get to, because the unconscious mind truly believes, as the 5-year-old that it is, um, that it is
Mm-hmm.
protecting you. engaging in this activity. So the guy's putting on a trade, and over again, he takes himself off while he's in the hash mark area of the distribution.
Mm-hmm.
He takes the trade off in here only to watch it do
Mm-hmm.
this. Okay, and he keeps doing it over and over again. So how do you know you have a limiting decision? Over and over again? I'm not telling you that you have a limiting decision. I'm not telling you that you have a limiting decision. But if you do, you better do something about it, because I'm going to tell you right now, your account's going to do that. It's going to do that. And here's the amazing thing about it, Vadim. It has absolutely nothing to do with who you are as a person. Your unconscious mind is trying to protect you. It'll prove over and over again. Some people, like weight gain, for example. A lot of people can't lose weight because their unconscious mind believes it is protecting them by keeping them at that weight. Yeah. And so stuff like this, and so there's always a trigger associated with it. So we go back to the fight or flight concept. So we've established the idea that the unconscious mind is protecting you. Okay. As far as it's concerned, it's protecting you. So what happens when you feel like you're being attacked is that you go into a physiological state of fight or flight. Okay, fight, you're a wolverine, you're a pit bull, you're going to stand your ground and fight. Either way, you're going to be really aroused, and you certainly can't think straight. Or flight, you're an antelope on the plain, and there's a lion coming out, and the chase is on, right? Can't think straight, but boy, you can run like the wind. Okay, so here's the problem for a trader. All right, enter the trade. Everything's fine. As soon as that thing shows up on the screen or on the dome or whatever it is, fight or flight. It triggers the unconscious that, wait a minute, I'm in danger. I'm in danger. Fight or flight. Boom, can't think straight. Become an absolute idiot. Don't get behind the wheel of a motor vehicle. You're an absolute idiot right now. Okay? What are you doing? Oh, clicking the buttons. Oh man, I should have stayed in. Like this. Okay. We've all done it. We've all done it. Okay. And so, you know what that feels like. And you have to, now if you're in the moment and you're having fun, you may not have an issue with that at all. A lot of guys don't. But if you have any kind of a limiting decision from that first grade classroom or whatever, parents talking down to you or whatever, I don't deserve to win. I'm not worthy. I'm stupid. Just little stupid stuff that happened when you're 6, whatever. Then you may constantly engage in self-sabotage. So if you feel when you put on a trade that you're in a fight or flight, that you can't think straight, then you've got a limiting decision. If you keep engaging in the same behavior over and over again, keeping yourself out of the 70 tick trade you got in, if you keep doing that over and over again, limiting decision.
How is this
every time?
What about, for a lot of people, money is a very emotional thing, right? So
you could have limiting decisions about money. You could have really strange ideas about money going on in your head. I'll give you an example. And this is no reflection on your parent. Your parent was trying to provide for you. Their unconscious mind was trying to protect. And that might have manifested in some strange ways. For example, I grew up, my dear mother absolutely hated her job. And I don't think a day went by the whole time growing up my mother wasn't complaining about her job. Complaining about the job, complaining about the job, complaining about the job. Every day, negative, 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 negative. Now, you so let's say you grow up in a household like that, and the parent is constantly saying, I gotta go to work. Oh, I gotta this, I gotta, I'm working for the
Mhm.
man. I gotta make some money because I gotta pay the
Mhm.
bills. Okay. Um, you grow up in a household like that. You're probably gonna have some thoughts about money and work
Mhm.
that could, number one, have a huge impact on your work ethic, and what you think about work. You could end up being like, you could make a decision to protect yourself against every, because like my limiting decision is from my mother's probably, sometimes a limiting decision is a empowering
Mhm.
decision. So you go, okay, I grew up around this mother's complaint every single day. I don't want to be like
Mhm.
that.
Mhm.
Thank you, mom. Thank you, mom. I love you. Thank you for teaching me. Never, because it's like prostitution. It's like you don't want to do this job, but yet you
Mhm.
keep doing it, and you're doing it for
Mhm.
money. It's like really bad. Now you're getting money for something that you don't have
Mhm.
passion for. So it's like, thank you, mom. Now on the flip side, my father owned his own. Um, he owned his own furniture store, and he was completely self-empowered in that respect.
Mhm.
So I was like, as a kid, I got to weigh this stuff out. I can't stand my job. I can't wait to
Uh-huh.
go to work. you know, you know, and so
Well,
thank you,
that's why,
Dad.
Rob, you don't have a
Thank you.
job, but you love what you do and you're good at it.
Exactly. I haven't had a you know, and I asked my wife too. I go, because I go through periods where I make a ton of money, and I go through periods where I don't. I've asked her. We've been together since
Mhm.
1989. Yeah,
Mhm.
1989. Uh, whatever that math comes out to. I've asked her. You have any regrets?
Mhm.
Because sometimes you make $1 million, and
Yep.
sometimes you don't. But I never varied from doing what I had passion for, which goes back to that
Mhm.
earlier thing. And so I find trading, in the same light that we're talking about here, I find trading to be an absolutely astounding venue for personal
Mhm.
development, because trading is pure capitalism. Okay, there's no product,
Mhm. Mhm.
there's no anything. You don't need cars, you don't need employees, you don't need, you need a computer and an internet connection, and you're
Mhm.
in business. Oh, you need
Mhm.
some capital
Mhm.
in an account. Well, it's pure capitalism. It's not, I mean, it's like, you open a restaurant, you got capital expenses and, leases and personal
Mhm.
guarantees, all this kind of stuff. That's not really pure capitalism, because pure capitalism is you take money and you make
Mhm.
stuff happen with it. That's trading. And it's happening really, really fast. Boom, boom,
Mhm.
boom, like this, right? So you've got this like instantaneous feedback mechanism that um, helps you in personal
Mhm.
development in a powerful way. And I just love that aspect of, you got a limiting decision. Guess what? It's going to come up.
Mhm.
It's going to come. Now, you may be able to overcome it. You might be able to work through it, or work in spite of it. But if it keeps coming up, you should probably address getting it cleared out, because it's not that
Mhm.
tough to do. It's like I said, this technology is like, cell phones and stuff. It's really
Mhm.
advanced, and you can do
Yes.
that these days. So, yeah, so it's just wonderful, when you look at trading as a feedback mechanism for making yourself a really
Mhm.
better person, and grateful, thankful person, um, because it's a wonderful business, and it has a lot of freedom associated with it. You're a trader. You can walk out of the office
Mhm.
anytime you want.
Yes.
You know. You can do, you can do pretty much what you want. You don't answer to anybody, and gives you a lot of personal freedom and personal development. Hard work, but you know it's
Mm-hmm.
very gratifying.
Absolutely. Rob, can
Yeah.
you share with us then all the social links you got? And I want to make an announcement too.
Yeah. Thanks for asking.
I want to make sure that you guys connect with Rob on all kinds of different channels, so you never miss out a good, valuable information from him. And we're gonna show you all the links here in a second.
If you go to, excuse me, if you go to oiltradingroom.com and hit the social tab, you have all the, excuse me, links um, into our social networking of Facebook, Instagram, Twitter, our YouTube channel, and
Snapchat and
Snapchat and
and
Periscope.
on
Yeah.
Monday, I believe you're doing your first official Periscope, right?
I think we're going to do that on Tuesday because Monday's a holiday for the
Okay.
markets. So,
All right. Let's do it
yeah.
Tuesday then, and we're gonna do it in the evening, and we also gonna invite everybody. So make sure that you guys follow Rob at least on one of those channels and on Periscope, so you can get notified when Rob is going live, and you can you can ask questions from Rob, and he will answer you live right on Periscope, and it's gonna be great. It's gonna be fun.
Yeah, and thank you, Vadim, for excuse me, helping me to understand how some of these things work, um,
It's a lot of
and
fun,
uh,
and
and
it's
helping
fun
me
to connect
to.
with people. You never know who you're going to meet, and I think you have a lot of value to give to people, and we need more people like you.
Well,
Yeah.
thank you.
Well, great. This was a good, another good interview, and I have a lot of topics I've written down in the last hour for the next video, which we're going to do probably next Thursday or Friday, since we got the Periscope on Tuesday. And thank you again, Rob, for everything you do and for these interviews. And I will talk to you on Tuesday.
Okay, man. Hey, thanks for having me. Thanks for doing these interviews, and thanks for helping out and helping us to get out
All right.
to help
Thanks.
people.
Love you. Bye
All
bye.
right, man. Love you too, babe.